Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. Monday evening again, and Edwin is back after a relatively quiet week with nothing much happening, Edwin, eh?
I'll tell you what, Matt, we were up there. I mean, Trump visiting China. You had the rally over in England over the weekend, and we had the budget. We unfortunately, if we had we not had the other two big events, I reckon we would have been up there. We would have stopped, like I said, it was budget to stop the nation and potentially stop the world. And some may think the property has come to a screeching halt. What do you think?
Well, yes, it is a very interesting situation. And I will say, Edwin, that the amount of media coverage on the budget has been absolutely astronomical. And trying to wade through all of the different opinions and points of view, you can basically separate the property sector who's saying, oh, it's going to be a problem, from the investment sector, oh, it's going to be a problem. There are some people saying, oh, well, when our housing will be a bit cheaper, etc., etc. I made a show, is the Australian 30-year property super cycle over? Because Richard Wiles from Morgan Stanley actually suggested that things were significantly going to change for the banks, because effectively they won't be lending so much because the investment sector is not going to grow as much, etc., etc. And he actually said, for Wiles, this is more than a temporary hiccup. The housing market can't adapt to it. Rather, this is the end of an era, more than just a little hiccup. The government won't say it directly, but the end of the 30 years housing supercycle is exactly what it intends here, according to the journalist. So that's an interesting take. So it's deliberate.
Yeah, look, I don't think it's is as deliberate as this fellow may think it is, and I don't know about the super cycle or the 20-year cycle and the land cycle and every other cycle. I think we've just got we just got lunatics running the asylum. Like, look, at the end of the day, one thing's for sure, right? One thing's for sure. The younger generation were pushing, and others, we're egging on the younger generation and pushing and pushing and pushing to stop the boomers and basically whack the boomers over the head because that they were born in at the wrong time or the right time, and they bought everything and left nothing for the for Generation X and Z and everybody else, allegedly. So the government was listening to that voice, and because they were being egged on by the biggest voting bloc that they've got, apart from the immigration. And guess what, Martin? One of the things is when you let the wolves in, right? They're not gonna. It's not gonna get pretty. It's not gonna be pretty. So basically, they came in sheep's clothing. Now, what have they done? They have absolutely decimated the younger generation by way of also incorporating or bringing into the bag of goodies, or the taxable bag of goodies, the crypto, shares, any other asset class that you're going to be trading quicker, or you're buying and selling. So every time you do a transaction, bang, you get slammed with that CGT. Every time there's a transaction, you get slammed with a CGT. But this is what happens, folks. As I've been saying for a long time now, I've been saying since we've been watching Melbourne play out, where when you start interfering with the markets by bringing in by bringing in policy, by bringing in all these taxes, and you start pushing the investors away. You got to make sure you're doing one or two things. The first is you got to make sure that you've brought immigration to a standstill, right? To a stop until you deal with what you've got. That's the first thing. The second thing is you've got to deal with construction. Now, if those two intricate, those two elements are out of the equation, you're screwed. You're stuffed, right? Now, if the young people thought that they were going to allow these thieves to come in and only take what's the boomers, what's what belongs to the boomers, and they were going to. I mean, here it is. They've got another thing coming. But in my segment later on in the show was Edwin's conspiracy theories. We're going to break that open a little bit more. This is what happens. You can't just give the government free rein, and because neither the libs nor the labs want to deal with immigration and construction, and until you've got those two things in order, forget about it, forget about everything else. And yeah, people are going to talk about the 30-year cycles, the 18-year cycles, the 25-year cycles, the 23-year cycles, and the 50-year cycles, and every other cycle, right? You can look at those things if you're going to bring everything into the pool, or you're going to bring everything into the equation. I personally, this is just my personal opinion. I've even gone, I've even had my discussions with part of our team as well, but this is just my personal opinion. There is a lot of dust in the air at the moment, and until that dust settles, we're really not going to know what's going to happen with property. There's a lot of high expectations that people got told when agents been buying the listings, and now those expectations are coming down. It's not as much as it is. People are saying it's property prices are crashing and this and that. So one thing that you can take, you can take the first tip that we're going to give tonight is, you've got to be careful. If you've got your property on the market for sale, you've got to be careful. A number of things. Number one is, who's the agent that's leading that the campaign? What type of marketing campaign have they initiated, and how much skin in the game do they have? Because if you can't answer one, or if you can't answer all of them, you've got the wrong campaign, or you've got the wrong agent, or they've got no skin in the game. You can be assured as hell that they're going to be pushing you down to accept a lower price whilst the dust is settling. Because I always go back to those 2 points, Martin. One of them is construction, and the other one is immigration. You don't want to deal with those. You can talk cycles, you can talk whatever you want. When the dust settles and there's no more, real construction happening, and you keep on piling on more and more people, well, what have you got? You've got the mess. You've got a bigger mess than what you had before, and you've got a lot of people more people upset than what you had before. That's all you've got.
Absolutely. And I think you're right. Let the dust settle. That's exactly what I concluded in my post yesterday. Just take a chill pill, just let it all settle down. Don't get bounced into making quick decisions, because, of course, the chances are that, well, there could be some changes actually when negotiation with the other parties as this goes forward. But I thought the Matt Barry, you mentioned Matt Barry, the Matt Barry quote's quite interesting, right? So this is what he said. The tech chief, Matt Barry, says Australians now have better odds growing wealth through Powerball and poker than investing in shares under the proposed tax changes. Yeah, I thought it was an interesting angle.
Yeah, look, it is very interesting angle, and like I said, look, I do appreciate a lot of what Matt says. I do appreciate a lot of what other people say in relation to it. But when you start egging on the government to do, just to focus on, if they focus on negative gearing or CGT for one asset class and not across the board, and you open the doors for that wolf to come in to the sheep's pen, well, you're asking for trouble. So this is why I say, this is why I brought about that, that post what Matt was saying, among a lot of other people. Now you can't invite the wolf into the sheep's pen. You can't invite the fox into the chicken coop. You can't invite, you just can't invite the thief into your house and not expect it to ramage and rampage through everything. They're not selective. Now you've got the issue, but I think we've still got a long way to go before this is etched in stone, right?
Absolutely. And the other point I'd want to make is all of the talk about new housing approvals is actually completely misleading, right? So basically, the federal government will pay the states if approval numbers go up, but approvals do not equal houses built. And
Yeah, 100%.
everything is that I'm seeing suggests that actually the capacity to build is going down because the costs are rising. Can't get the building capabilities that you need. The trade is so. There's something fundamentally flawed at the center of this. That actually focusing on building approvals is actually completely misleading. And of course, as you've highlighted here, Edwin, actually, the Australian Labor government admits not a single house was built by the $10 billion fund. So, despite the half and everything that I've been talking about, no extra houses have been built. So, once again, it's smoke and mirrors, it's words and figures differ.
Yeah, and this is what I'm saying. You've got to be very, very careful whether you're buying, whether you're selling, whether you're renting. You've got to wait. The dust is going to settle, and there's going to be a lot of people that are going to be caught out. Obviously, it goes back to the market conditions in the area that people are going to be looking for specific to that area, and we can go on and on and on. But at the end of the day, there's very little to no construction, and approvals mean jack nothing. And if in a high-rise development right now, you can whistle Dixie if you think that you're going to be buying something off the plan today that they haven't put shovel to the ground, and you're going to get the keys in 3 years' time. You can be expected to sit there waiting for to be handed the keys. In 5, if you're lucky, more likely 6 or 7 years' time, and then you're still not going to know. You're not going to know what you're going to get delivery of, and this is where the government's got it wrong again, because a lot of investors don't want to go into high-rise development, and the investors that were going into high-rise development, which were your WeChat chatterers that were just being corralled, being bussed, being flown in droves. Hey, that game ended 3-4 years ago, more than likely 5 years ago. That game ended, and the Silent Tigers. They're not a. It's not a block, a buying block that's going to that has an appetite for high rise development. Let alone all the local investors. They want land. They want land. They want freestanding homes. As I said, worst case scenario is your duplexes, villas, or townhouses, or very small to medium density developments that have been built, that have stood the test of time, that have been stood at least 20 years. If you go into your 4 levels, 5 levels that would be built in the late 90s, early 2000s. Anything beyond that is got major issues, and they don't want to buy into this. So this notion that the government is going to, as all of found the formula to get investors into the new, there are areas in Sydney, and we're talking specifically to Sydney now. There are areas in Sydney that won't allow duplexes, let alone medium density, let alone high rise development. And the government thinks that this is the silver bullet that's going to win them votes, and it's going to put the young people into affordable housing, and it's going to put the young people into rentals. I mean, they've got rocks in their head. One, because, like I said before, and I've been saying for a long time, and that is a lot of these places where there will be issues. I'm not saying that there won't be issues. I'm not saying people won't be struggling to pay the bills. I'm not saying that there won't be any mortgage stress. I'm saying for a period of time, and until things settle down, there'll be a lot of kerfuffle. And a lot of people are going to panic, and they're going to panic sell. But guess what, Martin? The desirable areas where some of these people want to live in, not all, but the majority of these young people that want to move into, or these young families that want to move into their own principal place of residence, they can't afford them anyway. Even if the market dropped 30-40%, they wouldn't be able to afford them. They're dreaming. And if we're talking about even a 5% drop in prices across the board, across Sydney, or even 10%, there's a lot of areas, the majority of Sydney is still unaffordable for your first-time buyers. And if property prices are dropping that much over a short period of time, well, guess what? The banks are going to make it a lot harder for people to borrow, especially if they don't have, if they've never borrowed before, if they don't have a loan. So what you've done is you've eliminated the stepping stone for the young people to get into housing. That's what you've done by bringing in this draconian proposed budget changes to CGT, and negative gearing is another story, but predominantly CGT. So because there's a lot of young people, my son himself, I taught him to rent vest. Before I just helped him buy his principal place of residence with his new wife. Just helped him buy over the weekend. So this is my own family, and so likewise with my daughter. So this is something that is now not going to be somewhat available for the young people to use that as stepping stone, or even trade crypto, or even trade other shares and other asset classes, as I said, because as they transact, they're going to be hit with the CGT straight away. And a lot of the young aspiring companies, the startups, they're not going to be around much. They're going to pick up stumps and go, because from what a lot of people are saying, in a lot of the cases, basically now they've got a new business partner. That basically owns 47 to 50% of the new startup or the new venture of the business, without having to be burdened by the ongoing costs of keeping a SME enterprise running and ticking over. So we've got all this confusion. We've got all these issues that have culminated from the budget. So all of it's happened, is that, and then you've got people now. I saw a lot of social media posts about people were talking about raising the rents and sharply, and I mean we've got Chalmers telling the whole world that rents will only go up by $2 a week, but they're still going up. So whether it's $2 or $20 a week, the rents are still going to climb, because you've got no new construction. You've got no new to offset a lot of these issues. What you do have is a lot of new think tanks. You've got a lot of new focus groups to explain how they're gonna spend all this new wealth that they've just created so all you've got is a growth in the public sector, and everybody else can go to hell. And unfortunately, as I said, the biggest block that the government are relying on, which is the younger generation, may turn around and bite them in the arse.
Absolutely. And it is, I think, a really, really worrying situation where young people are going to be very much exposed to some of these things that are coming through. It is worth reflecting just a little bit more on the budget, insofar that, according to this article, granny flats are out, duplexes are in. So effectively, if you actually buy a property and knock it down and put duplexes on it, you can actually still get some of the tax breaks. But if you buy a property, knock the property down and rebuild it, you can't get it. And so it does tweak the situation with regards to what types of property, and they're talking perhaps possibly it will drive a boom in small scale housing developments. And what that basically means is that you can't just profit from a knockdown and rebuild. But interestingly, the other observation there, the tax changes could push up the prices of existing homes in some areas, according to real estate. So that's because, of course, the family home effectively is, well, it's the last bastion of investing opportunity, really, it seems to me. So people will be selling assets to buy owner-occupied homes if we still see prices rising in that area. So it is not just a one-way street. And again, I do think that it actually is going to have a very significant impact, but we don't know the full impact yet. And that's really the point. But it is interesting also, as you say, the modelling from Treasury was about $2 a week, right? According to that. And of course, the industry said tax changes may drive up rents. Well, how much, of course, is the question. The fact is that, of course, investors will try and look to cover and recover some of those additional costs. But of course, how much are they going to go up, and when do they go up is going to be the interesting question. I've already had some fallout in my one-to-one conversations at the end of last week, where people were actually already getting twitchy about what was going on. And you've picked this one up, which was a remarkable story. This mold-ridden rental was on the market for $900 a week. Chalmers got up to deliver his housing budget, and the rent shot up by $450 overnight. That's really the problem, isn't it?
Well, it is, Martin. But if you that's a great headline, and that's why I read it. So I put it up because it makes for a great headline. But that's a general gist. But when you read the whole article and you read the comment that the property manager made as well, further down the page, you'll note that the property manager says, "Hey, look, the property was taken off the market somewhat, and because basically." The trend moving forward. I mean, this isn't what the property manager said, but in essence, it's what I've been getting from a lot of my colleagues as I've been doing the rounds, talking to my colleagues in the real estate industry, is that a lot of people are refocusing on the rental properties that are vacant. They're going to spend a bit of money on them and ask for much higher rents because they've lost the notion of buying again or buying a third one or a fourth one, whatever the case may be, right? So in this case is a similar scenario where the property manager says that the landlords decided to clean it up, do it up, and because they're going to achieve higher rents because of the scarcity that there is in the market. Look, if you read that article a bit further, Martin, you will see that even Pringles or Pringles, whatever, in that article, even he talks about, and for when you've got one of your biggest Albanese fans, saying that that he's concerned about the numbers in terms of or availability in rentals. Well, then the government have got it wrong when you got the ABC, Purple Pringles, and all the other cheerleaders of the Albanese government. When you got them concerned about the actual numbers and what this proposed budget actually means, well, you know that they're in a world of shit. But look, outside of that, Martin, we know that once it was announced and we started putting the numbers together, and I was talking to Dusty and Evan, the rest of our team and our extended group of people, we've come to the conclusion that the biggest the winners out of this somewhat are going to be, as you said earlier on, are going to be your people that have got the principal place of residence, right? They're going to basically say, you know what, stuff it. I'm just going to may sell one, may sell whatever, basically consolidate and bring that money back into the principal place of residence because we just had enough. And this is what's going to happen with the boomers, right? So this is where the young people are, again, they've absolutely got it wrong because the boomers don't want to move outside of the area. That is one thing that they've got to get it through their heads, that they don't want to be retiring 40, 50, 70 kilometres away from the home that they've been living in for the last 60, 70 years, in the area that they grew up in, and they want to retire in that area. So what are they going to do? They may sell off the old shitty investment properties that they've failed to look after for 3-4 decades, and consolidate their wealth, and they'll put it into the home. So you're going to what we discussed with the team is we're going to see a big growth in your multi-generational homes, right? Where you're basically going to expand, you're going to go up, and you're going to go out backwards, through to the back, and you're going to go up, and you're going to basically have two dwellings in one. Not necessarily, not Torrance title or anything like that, but just they're going to accommodate it so they can have multi-generations living in the property, whether it be 2 or 3 even, depending on how big the property is. Why, as you said also, because most of the case you can't afford. The numbers don't work on buying a property, knocking it down, and rebuilding a duplex. Right. In most of the cases that I've looked at over the last month, a lot of the properties that are being offered to myself, so I can offer it to my clients, my developer clients, for duplex sites, I've gone back to the real estate agents. I've gone back to the actual property owners that have approached me personally, and I've said to them, look, you're asking too much for the land. the numbers don't work. You want to take your property, or these properties are better off being sold as principal places of residence than they are as development sites, because the numbers don't work. They appear on the surface to work on face value, but when you now add the costs of construction at closer to $8,000 to $8,500, if you want to build something above, a little bit above the average, I mean that's a lot of money. And then you've got to recover. Then you've got your GST component. Then you've got your council contributions, and you've got your all the plus, without any guarantees. So this is the so a lot of the money is going to go back into and those that are going to keep the investment properties. I'd say it's going to be a 50-50 call. They'll upgrade them and ask for a hell of a lot more in rent. And guess why, Martin? Because they can. Because you've got areas in Sydney that it takes anywhere from a year to 2 years, without exaggeration, through some LGAs, to get approvals to do a knockdown and rebuild, let alone to get an approval to do a duplex. You can whistle Dixie, and you very, very rarely see medium density developments, your villa style or your townhouse style developments, let alone apartments or high rise, because they're very, very much against it. And the mountains is one of those corridors. From the lower mountains right up to your Katoomba, trying to get anything through the council, and you'll be pushing daisies before they give you an approval. So these are the areas that once the dust settles, and once you take away from the pool of rentals, because people just said, stuff it, I've had enough, I just deal with it. Once you take away, there's nothing that's going to put back numbers on that rental pool. And what's going to happen? Rents are going to go through the roof. So I'm already talking to some of the agents that I've been conversing with, in the mountains, as late as today, this afternoon, and the landlords are already looking at ways for to upgrade the properties, and in the next when they're going to give notices to vacate, when the tenants do vacate, some are going to go do some spiff up the properties a lot more, and guess what? Ask for a lot more, and it's and because there won't be much available in many areas of Sydney.
Absolutely. There's no doubt that it's going to change things quite dramatically. And I do think that the story of the bigger owner-occupied home has yet to be fully told. Interestingly, at the top end of the market in Sydney, prices actually have dropped at the top end. So that may actually have a countervailing effect ahead. But if you're a younger person and you look at those people who've actually gone through that property ladder at a time when they can actually generate income through various investment strategies, I mean, this sort of tells it quite well. If you're an Aussie under 35 and reading this, the message is simple. The wealth building game that you were promised doesn't exist anymore. Property is gate kept. Shares and crypto are taxed harder. Trust structures are punished. You either learn a new game or you spend your life paying for someone else's. I mean, that's not a million miles from the truth, in my view.
Yeah, and this is the unfortunate thing is this particular character on X was one of the from the other posts that I read about it. It's one of the many cheerleaders of egging on the government to said the boomers, without realising that, as I said earlier on, if you're gonna the wolves come in sheep's clothing, thinking that it's a shepherd and it's going to look after them, and at the end of the day, takes their wealth and everything else. So, like, as I said, that property ladder for many has just been wiped out, and you'd be surprised how many young people were the first protocol was to buy an investment property, further out into the regions, and then rent vest, let it build up in somewhat capital value, than to draw down against it to buy a principal place of residence. So that is a strategy that many have been using for about 20, 25 years. Um, you know, so one of my old mates, Chris Gray, was basically coined that whole process, and and but that's what a lot of young people were doing. Now that's all being wiped out, Martin. This is where, but not only that, but then you've got your Kryptonians, and you've got other people that double in shares and everything. So this is the aftermath. I mean, just going back a step in relation to, like, I've been flat out over the last few days. I've been absolutely flat out because a lot of my old clients that were thinking about going in buying an investment property, out in whether it be WA or wherever the case may be. I've been talking to them over for about 6 months. Three of them have now said, Edwin, can you come over and give us some ideas as to what we can do with our principal place of residence, because we're going to forego the idea of investment property now, because obviously we're not going to get involved with new developments, let alone high-rise developments. And now we basically want to get some ideas as to what I believe would be a value, would enhance the value of the property where they're at, without over capitalising. But when you start taking everything into account, you start taking generational living into account, you're going to get some pretty big homes. And as I put a post up on LinkedIn, we're going to go from your Mac mansions to your big whoppers. And when builders come along and say, what would you like with your what would you like with your renovation? Would you like a granny flat with your renovation? That's what's going to happen, man. We're just going to, because people won't be able to, if they're not going to invest in property, they're not going to invest in shares, they're not going to invest in crypto. Where else other than parking it abroad? But even if you park it abroad, you basically got to have residency overseas. You got to have your money stay overseas, and you can't just do that with hundreds of thousands of dollars. You basically got to be carrying millions to be able to have an offshore bank account. But every time there's a transaction, you bring money back into Australia, you're just going to get hit. So this is wiped out a lot more people, and this is really not the desired effect that many in the general public were looking for, and now we've got to walk it through.
Yes, absolutely. And I don't know whether you saw this quote, but I thought it was really quite interesting. Christopher Joy reposted a Richard Holden quote. This is Professor Richard Holden. I can't believe it, I'm saying this, but Barnaby Joyce is right. You buy assets out of after-tax income. That's why every advanced economy taxes capital gains at a lower rate than ordinary labour income. And if we want to lower the burden on workers, then we should tax labour income less and consumption more. Now, I think there's a really important point there, right? Because a lot of those investments are indeed made out of post-tax income. And if you look at the GST, which in Australia is at 10%, it's a lot lower than in many other countries. And so we've got some fundamental structural issues, I think, in Australia in the way tax works. Now, you mentioned earlier on that, the government size of government's increasing. It's going to continue to increase under their modelling. The amount of taxpayer money that was going to be taken out of the economy by the government through tax is higher than it's ever been and will continue to grow. And so we're in the situation where we have an economy that is essentially more and more, well, it's socialist, really, isn't it? It's run by the government for some. And it's interesting, I don't know whether you saw Christopher Joy's commentary in the papers, but he was suggesting that, well, think about it. We've had a very high migration for a long, long time. A lot of those migrants are actually perhaps people who will vote for Labour. And so he's almost suggesting that there's actually a self-reinforcing process here where we're getting more of the people coming into the country who will buy the arguments of Labour and essentially will allow Labour to continue to do what they're doing, take more tax from people, grow a bigger economy through the public sector. But actually, economically speaking, it's a bit irresponsible. And if you look at the productivity number in the budget, there is no change over the next few years. There is no improvement in overall productivity in the budget, which suggests to me that we have an economy that is really not very effective. And then, just to add insult to injury, of course, net overseas migration is going to rise. So they're talking about revising the numbers up from 260,000 to 295,000 in the year 25 to 26, and from 225,000 to 245,000 in 26, 27. And that means that the increase in migration will be around 35,000 people. And there's going to be a little bit of a lower rate of temporary migrants leaving Australia and higher rates of people moving here from New Zealand. So we've got higher migration. Now, that's very important to understand because, of course, migration is creating demand for property. So that's something else that we should be thinking about in terms of the context here. So they're going to actually continue that same strategy. We're going to have more people coming into the country who potentially will support what they're doing. And it's interesting, just taking that slightly further, as you've highlighted here, the federal government will spend $85.2 million fast-tracking migrant tradespeople in hopes it's going to ease a dire shortage of skilled construction workers. Well, foreign trade is to be fast-tracked into Australia. How do you make that work, Edwin? How do you make it work?
Well, that's the thing. You've got to bring them in. You've got we're not really producing anything apart from the mining sector, and even that's a bit of a shambles. You've got to bring in the migrants in order to play around with the inflation numbers. But this is the thing, Martin. This is the Libs don't want to. They haven't said that they're not going to that they're not going to lower the numbers per se. What I heard, now correct me if I'm wrong, but what I heard the shadow minister say was that they are going to reduce the numbers from certain areas, from certain places of origin, but that to me says that they're still going to bring the numbers in from other parts of the world, right? And you've got to bring them in order to build. Martin, I always go back to 2019. In 2019, we were really, we were going hammer and tong with construction. And towards the end of 2018, beginning of 2019, I was preaching doom and gloom because I knew that I knew 3 or 4 of my colleagues that were running real estate offices. They were on the 3rd and 4th credit card, and these credit cards were maxed out to $20,000, $30,000, $40,000, $50,000. And they were getting credit cards to pay off the interest on the other credit cards because they couldn't keep the doors open because things were just not moving. So, like I said, I was very much a preacher of doom and gloom, and it was going to be a hard fall. But for the pandemic, it saved the real estate industry as well as the property arena, because we had 2 things: we had immigration under control. And secondly, there was an oversupply of property, and everybody was still going hammer and tong because pushing out the developments and pushing out the property that the WeChat charters had bought off the plan from 2013, 14, 15. They were coming to completion, and there was you could say there was even an oversupply of property in many parts of Sydney. So now we've got the total opposite, and we're still bringing in migrants. And construction from 2019 to now. In 2019, you could build on average an apartment, a 2-bedroom apartment, for around about $270,000 on the cheap, and about $310 if you're building with a little bit more luxury. But now, when you're running the costs anywhere between $580,000 to $640,000, that's just building costs. That's not all the add-ons are on top, as your GST, your land costs, your council contributions, and everything else. That is, I mean, do the math, and that is why there is no appetite. There is an imaginary line runs through Strathfield and Burwood, Mud, right? Think of an imaginary line running across Strathfield and Burwood. So east of that line, heading towards the city, developers may be tempted to build because they think that they may be able to sell at anywhere between 18,000 to 22,000 a square metre retail, right? south and west, south, southwest, and west of that imaginary line, you can whistle Dixie if you think you're going to be able to sell anything above $12 to $15,000 a square meter for a new build. But guess what? It costs you closer to the 18,000 to build a bloody thing. So this is why the math, the numbers just don't add up, and this is why the government, if you recall, in the previous podcast, we mentioned that the government have got a pathway for some developers, some developments where they're actually underwriting 50% of the development. Otherwise, the banks won't lend them the money. There's a development site in Box Hill at the moment with the owner that has had owned the land. The family's owned that land for almost 2 generations, and they could build 140 apartments. The construction cost, by the time they build, right, they will still do their ass, and they own the land, Martin. They own the land, right? And even at today's cost to build it and sell it, they won't make a profit. They'll actually do their ass. So they're looking for they're looking for other options. Now, there's another hidden factor that many aren't talking about. The mainstream haven't picked up. You and I have spoken about it a number of times, and at this point, I'm going to raise it again, and that is the fact that a lot of the major constructor, like for example, your CSR company, if you recall, we broke the news that was being sold to an overseas contingency. So that came under private hands again, and it's actually owned by a French company. Now, I've got two people that follow our show that are actually high up in the ranks in the old version of CSR in management, and I had the pleasure of having dinner with them over the weekend, and what they just shared with me, they've left the company because the company is fully French owned now. And what they said was what you and I predicted would happen, and what we said would happen, and that is that 99% of the products that are now being sold with a CSR badge, that people still believe and think that it's being made here in Australia, it comes from China, where there are no controls. There are no checks and balances the way that we have it here, or the way that we used to have it here. And from memory, I don't think anybody that was in the old companies is there now. So they've done away with everything. They're using the French model now, but they basically bought the badges, and the majority of the products are from overseas where there are no controls. So we've got two major headwinds. We don't have the workers, and secondly, to compensate for the high price points, well, we're importing the shit, and with no real guidance and governance and controls over what's coming in, like you and I have said, and I've been saying since 2015, as a matter of fact, that the gyprock that's coming in from China still has asbestos. The wiring, the insulation that comes from China still has some components that are that are toxic and asbestos laden. And there's a lot of other materials that have been coming in from China since 2014, 2015 that don't get scrutinized. And if people think that this new engineered stone that are going on kitchen bench tops don't have silica, you got rocks in your head. All they've in the most part, all they've done, and this is from the horse's mouth themselves, the importers themselves, and the WeChat chatters themselves, they've told us all they've done over a lot of the manufacturing companies over in China is they've just changed the certificate. They haven't changed the composition. And they've changed the certificate to say, oh yeah, there's no silica, you can go through, or there's a very low percentage of silica. And guess what? We're not paying the same amount. We're actually paying more because there is no silica. It's new, so it's environmentally friendly. So we're going to charge you more.
Well, it doesn't surprise me, Edwin. And, the asbestos story continues to haunt, and will do. We don't know what we're putting in our buildings. We don't know how much of the problems will lurk for quite some time and then perhaps come back later. But it's not good news. Oh, I just want to cycle back. You mentioned the migration issue, and it's interesting that the story here was that the coalition could actually slash migrant arrivals by at least 70%. Now, of course, they have linked it potentially to this policy between the number of bills completed or at least approved versus the number of people coming to the country, although the numbers are a bit flimsy. And actually, he was very imprecise about precisely how much the migration would be cut. And as you said earlier on, where it would be cut and what the implications would be. But I do find this interesting that according to a recent poll, Angus Taylor has now become the preferred prime minister after the broken promise from Albanese, according to this particular piece of analysis. The government was marked down by voters for breaking election vows not to touch the tax breaks for negative gearing on capital gains, with 36% saying their view of Labour has been damaged. So that's quite an interesting little take on what's going on here as well. And so, there's an interesting political angle to this, as well as the purely economic one. And at the end of the day, it seems to me that we are in lost land here, right? We know that the Australian economy is doing very poorly at the moment. We know productivity is very low. We know that we've got a massive government sector and it's continuing to grow. We know that the tax take is growing more and more and more, but the tax take for corporates, not so much. And it seems to me that this budget is actually much, much more effective for corporates. And I would just remind you that, of course, there's a tussle going on between the mum and dad the mum and dad investors who are providing rental properties and the buy to rent mob that are coming in their droves now with government support and with government tax breaks. So what we're actually seeing is a mega shift between the properties that are actually owned by mum and dad investors who now perhaps will think twice about it, and those that are actually very much owned by the big players, like this development here, for example, which is the largest ever build to rent project proposed for Sydney's inner west. This is another distortion. And it's actually because the government is more aligned to the interest of big corporates. Just look what they did with the 20% gas tax that they didn't impose, than households. So they're looking at the household sector, in my mind, as just a way of funding the corporate largesse. And for Labour to be doing that is, for me, the most critical thing to understand here. We actually have a Labour Party that isn't actually really doing the things that you would expect Labour to be doing. But as you said at the start of the show, two sides of the same bird, right? It doesn't matter who's in power because it's the corporates who are running the show. And if you want another angle on that, it's just worth reflecting that Australia holds a very significant rank in terms of the total indebtedness that households have. This is the data for 2026, according to Visual Capitalist. And okay, you've got Switzerland, Luxembourg, and Norway just above. But the Australian debt is huge. Who does that benefit? Well, it benefits the banks. But I come back to what Richard Wiles says. Richard Wiles is saying, well, actually, with the property investors now getting squeezed and with credit perhaps going down, maybe the valuation of the banks is a little bit off. So again, it seems to me that we've got corporate land and the government dancing quite nicely with each other, but ordinary people are being left behind again.
Yeah, we'll continue to be left behind, and in the meantime, people are just going to there's going to be a panic everywhere at the moment. There's going to be panic. People are going to take advantage of that. The bigger corporations are going to take advantage of that as well. It's interesting how when you bring up articles like the proposed, what they feed the general public with the proposed developments that they're going to build, yet nothing's been built, and they don't realise how much it's going to cost to build this rent to buy. These corporate developments, these build to rent developments, and then you look at the areas that they're being built in, and you look at the average rents, and if people really think that they're gonna keep those average rents, they've got, again, you've got, it's all about supply and demand. because these are the only, if these are going to be the only substantial buildings that are going to be going up, it's going to cost a fortune to not only cost a fortune to build, but it's going to cost a fortune to rent in them, and also more to the point because of the location and where they are. I don't see one of those being built out at St Mary's. Do you have anything? Do you have anything proposed by the by these mob to build over in Raby or in or in Mount Druitt? Yeah, I don't know. I don't either, mate. I haven't seen anything to date. But this is what you've got. But we go back to those 2 points again, Martin. Is if we're not going to really, if we're not going to be willing to deal with the issue of uh, immigration, and we're not going to be addressing the issue around construction and what's happened around it, and how this pressure, this budget is even going to even put more pressure on the small business operators, because it's going to be a plus, but more taxes, more taxes, more taxes. Sooner than later, a lot of the smaller companies are going to say, yeah, stop it. I'll bet off, go back to get a political degree and become a politician, because they're the only ones that seem to be making money. Yeah, look, there is a little bit of light at the end of the rainbow, at the end of the tunnel, and that is that some naughty landlords and some property managers are getting caught out by the shenanigans, and good luck. Let's see more of it. But they're going to the a lot more is going to go under the radar, because there's going to be a lot less people willing to dob these bastards in, for fear of being kicked out, and that's going to be more of a real experience moving forward, Martin, regardless of what happens. But yeah, look, there is a little bit of light, but how long that little bit of sunshine breaking through the clouds is going to stay with us, who knows? Because the pressures are going to be horrific. There's a lot of cases at the moment in NCAT where of people that are being taking accommodation in makeshift garages, and that. But the waiting list to hear a lot of these matters in NCAT is anywhere between 3 and 6 months, and it's only going to get worse.
Absolutely. And just on that particular article, landlords hit with more than $50,000 in fines since New South Wales government's ban on no grounds evictions. And there have issued 12 fines in New South Wales fair trading, and delivered 13 formal warnings to landlords caught wrongfully evicting their tenants. But it's the tip of the iceberg. And as you say, it's very, very significant that many people are not actually prepared to take the issues that they've actually got through these processes, because the one, they take too long, and two, quite often the tenants are actually very frightened of the whole process. So it's a big deal. So it's a small glimpse, but not significant enough. And I still see in my surveys rental stress very, very high. A lot of households struggling to work out what to do. But I suppose as we sort of meander towards the end of this part of the show, Edwin, the question is this intergenerational equity story really going to stand up, or are they going to walk it back? And you've actually suggested that maybe, just maybe, they will walk it back.
Yeah, look, that we spoke about that. That it's coming on the guise of intergenerational equity, equality, whatever. But it's actually a money grab, a tax grab. But look, folks, keep calm. I believe that they will walk it. They will walk about. I mean, don't take my word for it. But look, keep calm, because I've convinced myself that they will walk it back, a lot of it. And these are my 3 points as to why, right? And I'll go through them really quickly. The first is there is a 50-50 chance that we'll walk it back. Why? Because the main voting bloc, which we showed earlier on, has had a huge backlash on social media across the board. The younger generation, the major voting bloc that votes Labor, and I dare say even the silent tigers will turn against Labor, because a lot of the silent tigers aspire to run their own businesses, and they're not into high-rise developments like the WeChat chatterers. Well, so it's going to potentially backfire on them as well from that side of things. So, wanting to, pushing or opening the door for the government to just hit the boomers with a sticks, just come back and bite, bit the young ones in the backside. The government went too hard too early, in my opinion, and this is why they've upset everybody, just about everybody, and it still has to pass the Senate, I believe, right? So it still has to pass it has to be approved. That's it. Now we know that the Greens are going to back it, but are they going to is it going to pass? I think they're going to walk it back. The second reason is, when you look at the real numbers, and as I said earlier on, when you got the ABC, when you got purple Pringles, and when you got Pringles, and you've got every other Pringle and nachos and whatever else they call themselves, when you got the cheerleaders of the Labor Party, when they start looking at the real numbers and talking to their audience about the real numbers, how the numbers don't add up in terms of construction, in terms of real delivery of projects. And so when they start sort of going against that, the Jim Chalmers numbers, well, they've got problems on their hands. And third, but no means least is, look, the Labor government nor the Liberals want a huge exodus from Australia into New Zealand. I mean, we have been welcomed there based on that story.
Yeah,
So,
come here. New Zealand's message to taxed Aussies after Albanese government removed the key discount in the federal government. Come over to New Zealand because they don't have the same issues there.
So there you go, Martin. So I think that's going to be the clincher, and they're going to walk it back. So let's wait and see. And it'll be very much a diluted budget by the time he gets to he gets through, gets to the end. And look, Albo's got the perfect alibi. So he'll just say, "Well, we've changed our position."
Well, he can.
We've just changed our position back to where we were before the election.
Yeah, well, he's done it before, and of course they can blame the Straits of Hormuz and whatever else. There's always,
of course,
they've always got alibis. But to me, it does actually make the idea of Chalmers ever getting to become PM much less likely now than previously, right? I mean, he's always been a bit of a spinner, but the amount of spin that he's done over the last week or so, he must be giddy after all the spinning. It just amazes me. Let's just quickly look at the numbers, because, of course, the numbers don't lie, do they? And it is worth just looking at what's going on. So this is the data for Sydney, domain definition of the Sydney region. On the 11th, 25,327 properties. A week later, 18th, we had 26,027. So a small rise. Listings are still tracking higher, Edwin.
Yeah, they are, and because there's a lot more properties staying longer on the market, and because the market is very cautious. People don't want to. They're not jumping in. That's why you got the news headlines. Auction clearance rates have dropped to 2020 levels, but this time around, there's not going to be a lifesaver, whatever they want to spin, whatever they want to say. The so-called deluge is still not there. What I have seen, and that's what I underlined in that previous slide, is we're close to 4,000 land envelopes for sale. And if you recall, when we started tracking the land envelopes, paying more attention, we were under 2,000 just over a year ago, 18 months ago. Now we're closer to 4,000, and over the last week we've had a rise of about 300 or 400 land envelopes on that have come on market. So this is where people have got to be careful. For me, the question still is with more uncertainty, more turbulence. Are the people just going to get fed up with that they're not achieving the numbers that the agents have promised them, and are they going to be taking the properties off the market? How many that are holding freestanding homes in that type of desired investments, how many of them are really going to sell or do them up to increase the rental? Because now they're realizing that they can, and there's going to be less property on the market for rent, so therefore they can achieve. So this is still yet to be worked out. But there is the turbulence. You can some areas have had a lot of properties come on the market. And because there's a lot of fear, there's a lot of fear that's been driven predominantly by the selling agents, and it's easier to convince their vendors to take a haircut than it is to do the job properly and achieve a better price for the client. So folks, just be careful what strategy you use, which agent you employ, and ask them whether and work out whether or not they've got skin in the game. Because if they don't, you're going to be behind the eight ball.
Absolutely. Very important to understand that and ask those questions. We've highlighted that before, but ever more important now, because of course, with the transaction volumes dropping, agents are under even more pressure to try and make anything happen. So they'll almost sell their grandmother to try and get a deal. Let's look at Melbourne briefly. I've got the 4th here. Is that right?
Oh, sorry, I've gave you the wrong slide, Martin.
Yeah. Okay.
Sorry about that. But we were around the 32,000 on the previous week. So I've just given you the wrong slide. But they haven't changed. It hasn't changed much for Melbourne. The numbers haven't changed much from the previous week to the 18th. So from the week of the Monday of the 11th to today, the numbers are still floating around your mid 32,000s. So there's not a lot of nothing's changing much there, because they're in their own race. They're in the world of their own.
Yeah, they are, and it's worth highlighting again that we've still got all of these houses that are hanging around, right? So it's quite fascinating. And again, when you look closely, quite a few of them are ex-investment properties. So that's something that we're seeing quite significantly in Melbourne, and Greater Melbourne in particular. So yeah, it's interesting. The more you compare Sydney and Melbourne, the more different the property markets look. Let's just briefly look at Brisbane. So on the 11th, 3,757. A week later, 3,928. So another small rise, not material maybe, but a little bit up. And looking at the auctions, well, we had very low clearance rates, very low numbers coming on. And of course, all those articles suggesting that the market is looking pretty bad. Tom Pamas was at it again, complaining about what was going on.
Of course, he's going to complain, because because people aren't going to go to auction. Look, Tom's just Tom. He's got his good points, he's got his great points, and he's got his bad points. But at the end of the day, they could say the same about us.
That's true. And let's look at the tracking for the auction comparisons, and you can see there that it is somewhat lower, and we can expect it, I think, to remain in sluggish territory for quite some time. Maybe we'll see something happening in the spring, maybe we won't, but I think people will probably just chill out for a little while at the moment.
Yeah, that's the safe bet is to withdraw and wait. Winter's now, we're well and truly into winter, so some those that can are just gonna wait it out till spring, and then by then the dust would have settled well and truly, and people will have a better idea. So try to make anything out of it now is neither here nor there. What you can, if you are going to be looking at buying, what you can try do is try to take advantage of the panic that agents are putting into their vendors. Yeah.
Absolutely. Let's look briefly at the rentals. So in Sydney, on the 11th of May, 10,590. A week later, 10,798, so a small rise. And in the Greater Melbourne region, 10,397 on the 11th and 10,798 on the 18th. So in both Sydney and Melbourne, the number of rental properties are up. But I would highlight again, Edwin, everyone is still talking about rentals going up, not down. And I would also make a quick point that in New Zealand and Canada, where migration was turned right back, rentals started to drop. So there is a significant linkage between the number of people coming in the country and the rentals. And we've said that, the government is suggesting more people are coming in. So that's going to put more upward pressure on rents. Plus, everyone's saying, well, the investors will pass on some of those charges to the renters as well. So unfortunately, the rental sector is under the gun.
Yeah, and this is counterintuitive to what the government wanted to do, and counterproductive to what they really wanted to achieve. But it's all in the guise. It's just a tax grab. But let's wait and see what happens moving forward.
Absolutely. I will just say, Edwin, that tomorrow I've got Leith Van Onselen coming on, and we're going to talk about the Australian 30-year property super cycle. Is it over? So that should be worth coming in and listening and asking questions live, folks. Join us at 8 p.m. Sydney tomorrow. But Edwin, as we come to the end of the show, you have your thought for the week.
Yeah, look, my thought this week's been now I'm not trying to be religious here, and I'm not trying to be philosophical or any way, shape, or form, but and it goes sort of on par with what we were talking about last week as well, and that is we got to listen to our gut a little bit more, right? You go with your gut feel, go with your gut feel, and the calmer you stay, the calmer you keep, the more you're going to listen to that inner voice inside to tell you whether you're going to turn left or turn right, or whether slow down or speed up, whether move forward or go back, or just sit still. But I guess that the biggest thing is that there is so much noise out there, and even myself, I get dragged into, because I spend so much time on the road, I get sucked into the driving rage, and I have to really push myself and force myself to calm down, just to listen and because if I'm not listening, if I'm not paying attention to not only who's in front of me, but who's on my right, who's on my left, who's behind me, if things are getting, if you just sort of get caught up in that whirlwind, all sorts of shit's going to happen, all sorts of bad crap's going to happen. But if we just sort of, listen to that, so I myself have been pushing hard against that anxiety on the road to try and get from point A to point B, because it doesn't seem like we've had any sort of fuel crisis, because it appears that there's more traffic on the road, there's more trucks on the road, more trucks are driving on the right-hand lane, but if I start chasing that or being pushed along by that, I'm not listening to my inner voice that's saying, "Hey, take it easy. There's pay attention to my surrounds." As I said, I'm not trying to be philosophical or religious here, but there's that pre-warning, that inner voice, that so we can only be more in tune with it when we ourselves stay calm. So, like I said before, keep calm and let the dust settle.
Keep calm and carry on, indeed. And I think it's really important, because people can get whipped up into a sense of, I must do something, I must do it quick, I must react. Sometimes the best answer is to say, no, just relax, just take a little bit of a breath, just think about this again, just think about it. And as you said, if if you're driving along and the traffic gets really bad, the last thing you want to do is to get road rage translated to you, because you're going to make bad decisions. And if you make bad decisions, then it can end up pretty bad. And I think that's a good metaphor more broadly. Edwin, thank you very much. Very interesting conversation as always. Appreciate all the work you put into these. And we'll do it all again next week, when, of course, there'll be more to talk about.
Most definitely. Looking forward to it, Martin. You take care.
Take care.
Bye.
See you soon. Bye.